Foreign exchange may be the world's largest and most liquid market, but it also seems to be the one most plagued by corporate scandal and criminal prosecution. Mario Singh is founder and CEO of Fullerton Markets, World Finance's Forex award winner for Best Fund Safety in 2019. Mario, why is the Forex industry so susceptible to scandal?
Well, Paul, you hit the nail right on the head. I mean, precisely the reason is essentially because of its size. The Forex market today trades essentially over $5 trillion in one day. And because it is the world's largest money market, that's part of the reason why there are so many scams that comes into the financial sector. That sounds, I know, a little bit negative, Paul, but one of the key things that I find has been very good industry-wide has been something called the FX Working Group, which is essentially a committee that is born out of the BIS, the Bank of International Settlements, and they have a code of conduct to basically say these are some of the industry's best practices. So with that, I do hope as an industry practitioner as well that we would be seeing lesser and lesser of such Forex scandals and scams throughout the world.
Fullerton Markets has really committed to fund safety and transparency. Tell me about your Fullerton Shield.
So the Fullerton Shield is basically our triple-level fund safety program. Level 1 is that we have a segregation of bank accounts between the corporate fund and the client fund, so that there's a clear segregation. That means the directors of the company will not be able to put their hands into the coffers and to start pilfering off client funds. Level 2, Paul, is what I term as a third-party fund administrator. Once we segregate the funds out, we then appoint a third-party custodian that actually helps in the administration of withdrawals and deposits of the client funds. And if that is still not enough, Paul, we have the third level. Now, this is unparalleled fund safety, right? So the third level, we actually have an insurance policy that is taken on the custodian in two areas. Number one, what we term as professional indemnity in the event that some of the employees or directors of the custodian were to engage in wrongful or criminal acts. And number two, we took the policy on cyber crime.
How does this commitment set you apart in what is really a ruthlessly competitive market?
I would zero that in on basically one word. It's what I would term as a proactive stance. Now, this is what I mean, right? And don't get me wrong, I feel regulation is a good thing. But having said that, I do find that regulation can be a little bit reactive. Reactive meaning to say it's only when problems happen that the regulators step in. And by and large, at that moment, the client funds have already disappeared. So by taking a proactive stance in ensuring that on day one, the client funds are not even sitting in the brokerage firm, we have raised that benchmark.
What do you see as the future for this conversation in the industry? Do you see your competitors or even the regulators adopting a more proactive stance?
Well, I would love to see that, quite honestly. I think at this moment, there needs to be a balance from the regulatory perspective of how they would massage that 1-2 step between a reactive stance and a proactive stance. So I would dare say we are one of those that's actually leading the industry by taking such a bold proactive stance in ensuring that client funds are segregated on day one itself.
Mario, thank you very much.
Thank you, Paul, for having me.
Click now to watch more from Mario on Fullerton's recent move to St. Vincent and the Grenadines and the innovative services the company offers to its partners. Thanks for watching, and please subscribe for the latest international business insights from worldfinance.com.